What is going on, traders? Welcome back to the Traveling Trader. So we went from one of the worst days in the markets in 8 months to one of the best days in the markets in 8 months. Is this a dead cat bounce? We will discuss everything market related in this video. I will try to make sense of it for you, but I will also be giving you the top 4 stocks to look at right now, the top 4 stocks to buy the dips on. As I said in my last video, I don't believe in completely divesting from the markets. In my view, you want to stay invested in the markets to one degree or another. Obviously, your distribution of what you're invested in will vary depending on the market conditions. However, history shows that you miss out on the best days in the market by trying to time the market. So we always look for value. Are there currently any undervalued plays that we can take advantage of? Whether that, takes a month to play out or whether it takes a year to play out, timing doesn't really matter. Unless obviously we're doing options, which I will get into a little bit in this video as well. With that said, welcome back to the Traveling Trader, your source for non-BS, concise, regular market updates. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are trading and what you are doing considering your view with the current market conditions. Without further ado, let's get right into it. As always, we'll start with a market update. I'll give you a status on some of the current plays and then jump into those top 4 stocks to buy the dips on right now. So for all intents and purposes, it looks like the market is factoring in this Delta variant and trying to assess what the risks are with this Delta variant. The reason I say that is because most of the hospitality stocks, most of the value stocks that we saw the market rotate into have been dropping like a rock. Not only that, but bond yields are dropping to year-to-date lows. These are some of the lowest rates we've seen in 2021. Now, the reason that is because investors are rushing to buy bonds. Why would you buy something that pays you 1.2% in annual interest? Well, it's because it is the least risky investment in the US markets. The bond market is actually bigger than the stock market. Most people don't know that, but there's an inverse relationship between bond yields and the price of bonds. So as investors rush into bonds, that drives the price of bonds up, meaning the yields go down. And that is what we're seeing now. Investors are rushing to buy bonds, not even gold. They're buying bonds in historic numbers at the moment. And as bond yields drop, that is good for mega cap growth stocks because the cost of money goes down and the value of earnings is ostensibly higher. That is why after suffering an official correction this year, the Nasdaq continues to pump higher, making all-time highs. It is up 1.4% today, not that far from all-time highs once again. However, the S&P 500 hit the 50-day moving average for the 8th time this year. The real question is this a dead cat bounce, i.e. a fake out? Will we continue to drop from here? Well, it really all depends on how the market interprets this Delta variant. Yes, COVID cases are rising, but among those that are vaccinated, is this really something detrimental? Is this just a case of herd immunity needing to spread more ubiquitously, or is the Delta variant actually something that will cause economies to shut down again? From a market and long-term investing standpoint, I'm going to give you a hot take. This doesn't really matter. We'll get into it when we get into the plays, but this uncertainty is the reason that we opened up some hedges against our portfolios. We closed our SPY puts for a whopping 244% yesterday. We closed our NASDAQ hedge, which we bought puts against the QQQ. We closed that for 40% yesterday. And we have a bearish Netflix trade. Netflix reports after the bell that we closed for 140% today. I also opened a slightly bearish trade on Nike that is down 25% today. The reason that I opened that is because of the bearish MACD, the fact that it is majorly overbought on the RSI, and we see the MFI, which is the money flow index, dropping like a rock. Again, currently down 25% on that, but we have a long time until expiry. And if you want access to all of our trades and you want to be part of the private trading group, we have almost 5,000 members. Link is in the description below. Would love to have you. It's a great value. If not, we appreciate your viewership nonetheless. Let us get right into the plays, the top 4 stocks that I'm looking at right now, considering the current market conditions. Stock number 1 is a stock that I get asked about all the time, and that is Amazon. Now, the reason that I'm pointing out Amazon here is because of a technical breakthrough called a support resistance flip. Amazon has been trying to break that 35.50 range going all the way back to July 2020. It finally broke through, shot up all the way up to almost $3,800 before retracing back down to former resistance and now it is trying to find support at that resistance. Obviously, in the group, we bought Amazon numerous times, not only going back to the COVID crash last year, but when it retested the support level here of this channel. However, if you don't own Amazon, this is a great point to dollar cost average in, as we dropped from the $3,800 level back to the $3,500 range, again achieving that support resistance flip. Now, from an option standpoint, we bought the $3,950 4,000 vertical call spread. This is a spread that we played at the breakout initially, and we 6x'd our money on that spread. I know it's ridiculous. I don't expect Amazon to hit 4,000 in the short term. I do expect Amazon to hit 4,000 in the mid to long term. However, it doesn't need to hit 4,000 for that spread to make money. The spread will gain value, and you could sell it prematurely for a higher price. So once we achieved this SR flip, we bought back into that $3,950 4,000 spread after selling it for profit, and now it is up 10 to 15% today at the time of this recording. Stock number 2 is CCL, or Carnival Cruise Lines. We also have an options play on Carnival Cruise Lines, but it is forming this ascending channel, and it fell to the exact bottom of this channel. This channel obviously was established in March 2020 in the beginning of the COVID crash. So I am very comfortable buying CCL at the bottom of this channel. Again, whether the full recovery lasts until Christmas or whether we go until summer of 2022, that really doesn't matter to me. That's why I said at the outset of the video, it does not really matter from an investment perspective. If you think that the economy will reopen fully at some point, and CCL used to trade in the 50s, it is currently $20 or $21. Do you think that this is the highest price CCL will ever be? If the answer is yes, then don't buy it. However, if you believe that there will come a time, whether 6 months from now, a year from now, 2 years from now, where people will be taking cruise lines and airlines and everything will feel back to normal, then yes, you want to get into these undervalued hospitality plays. And we played CCL multiple times. Again, more than ecstatic to buy it here at oversold conditions at the bottom of this channel. Stock number 3 is Jets. Jets is sitting at the 300-day moving average. Again, oversold conditions here. This might not be the bottom. I want you guys to understand what a long-term investment is. This might not be the bottom. It has had a monster day today, up 5%. However, yes, Jets can drop further if the Delta variant is somehow more deadly than thought. If we get a Delta, Alpha, Sigma, Pi variant, then, that could also disrupt the hospitality industry. However, these are long-term investments. Guys, I urge you, do not try to swing trade from videos, not even my videos, right? Don't try to swing trade from videos, because by the time you watch this, the market conditions could completely change. I see a lot of people doing this, not only on my videos, but on other people's videos. People will leave comments like, oh, I bought this and now it's down. Well, what price did you buy it? How soon after the video did you buy it? What were your profit expectations? What was your exit plan? Did you plan on taking profits? Did you buy it and hope that it would just grow forever like Jack's Beanstalk? Anyway, and stock number 4 that I'm looking at is Ford. Ford also achieved that support resistance flip. I pointed it out in the group when it hit the 100-day moving average, currently bouncing off the 100-day, having a strong 4.5% day. Near oversold conditions. I said before that Ford was the most undervalued car company when it was trading at $10 and below. It did hit a high recently of almost $16.50. So I'm comfortable buying Ford at the 100-day moving average. Again, this is a long-term investment. And just a general note, do not ignore the index ETFs. SPY, QQQ, VOO, SPY-V. You want to buy these at major moving average. If you look at the SPY-V, I pointed it out in the group yesterday, and I said that the SPY-V is currently below the 100-day moving average. This is a good point to dollar cost average in your long-term portfolio. I hold SPY-V in full disclosure in my retirement portfolio, in my IRA, and we have a monster 2% day on the SPY-V. I know 2% doesn't seem like a huge deal, but this is an index ETF. Anyway, traders, that is it for this video. I hope you got something out of this video. If you did, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of these stocks, what you think of the current market conditions. Would love to hear from you. Sign up if you want access to all of our trades. Link is in the description below. If you want to learn how to trade options, there's also a link to a beautiful course that I spent 100 hours putting together. That link is also in the description. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.